what's going to happen is, because the big volumes are still coming in, then we start seeing it working into those big volumes at the bottom print price. We start seeing this storyline, and the trade takes place, and we start seeing this move. And as the price moves up, of course, we can sometimes see this type of thing happening here. And this is where a lot of people kind of get a little bit tied up at times when they're trading at the sort of a 10:30, 11 o'clock, half past 11, 12 o'clock, those types of times, is that sometimes this is what happens to alpha. And because of that, a lot of people will come in and without really realizing how this is evolving, a lot of people will see that alpha changing and say, I'm going to sell it here. But if you're selling that, that would suggest that this is going to be a market reversal. But this is the wrong time of the day for a market reversal, isn't it? It's not got the necessary big money volume trades to turn the market completely. So what a lot of the times happens is, even though you've got alpha, even though you've maybe got a lot of alpha, you still find that price ends up doing this, and then it does what you need it to do, which is this. And you can sometimes see these types of things happening here, where you get the accumulation, which is always the game zones and all sorts of crap taking place. But in the meantime, what you'll then look back on your charts and say is, well, I sold there, I sold there, I sold there, I sold there. And you're like, yeah, but you weren't in the big volume sections of the day, were you? You weren't in the big volume. You'd never even seen the big volume. So because you didn't see the big volume, what made you think it was the turning point for the market? Just alphas, is that it? Well, remember the one thing about alphas. It's alphas plus volume that creates turning points in the market. It's not just alphas. Alpha plus volume equals market turns. Does that make sense? Because a lot of people think it's alphas, and a lot of people think it's volume, but it's alphas plus volume, isn't it? It's got to be alphas plus volume. So this is what we've got to try and understand. We've got to try and get the two things tying together. Now, sometimes the market does turn without alpha. Sometimes the market does turn without volume, because you don't get the volume. You just can't get the volume. It's not there. But if you zoom out a little bit, you'll probably find that the bottom edge on a lower time frame has oodles of volume available to work with. So you actually still do get the volume available to work with in that trade. So this is something that you'll start seeing, because you obviously want to work those short trades there. You want to work this short trade there. You want to work that. You want to work that. But ultimately, you still realize, unless I get the volume on the book, unless I see that volume on the book, the chances of me making any money on those trades are pretty slim. I'll be able to get scratches because I've got lots of alpha, but the chances that it's going to be the market turn and it's going to be the top edge are pretty remote. And this is why we asked you to think about this process in the likes of the euro, when we said, look at the big volumes on something like time segmented volume. Look for the big volumes in time segmented volume. And when you look for the big volumes, you'll start finding the big trade opportunities, won't you? When you look for the big volumes, you'll find what you're seeking. You'll see what you're looking for. Yeah? So this is something that you can't get past. You can't get away from this. If you don't have the big volume, how is it going to be turning the marketplace round? It's going to be something that's not going to turn the market round, isn't it? It's going to be something that you're going to say, well, I don't really have what I need, to get that bit of business done. I don't really have the opportunity to get that business done in that trade. So this is quite important. Why is it important? Well, let's take a look at how the euro's been evolving. And we're obviously just looking at just on the basic setup here on the euro. And this is the basic setup. So you can see exactly how this worked out this morning. You can see all the big volumes at the bottom edge here. Well, that's probably a long accumulation, right? So we can obviously understand that that's probably long accumulation. We can see that this is probably distribution. When the price drops off there, that's probably the end of the distribution, right? So you can see that the volume drops off just there. So that's maybe the end of the distribution. And when the volume rebuilds, then obviously that could be part of that big accumulation. Now the volume drops right out, which means there's nobody stupid enough perhaps to buy into the top edge anymore, because everybody now knows that there's a lot of short value in this trade. A lot of short value. And obviously the seller at the top edge then comes in and whacks it hard, and you get this beautiful sell-off into what quite clearly becomes a sizable volume accumulation into this phase here, isn't it? So when we look at the volume accumulation phases, you say, well, is this the distribution? It looks like it. So that drop off in the volumes probably is the start of the accumulations. Probably the start of the accumulations, isn't it? So when we consider this in terms of something like time segmented volumes, when we start thinking about this narrative here and we start looking at, for example, developing a value narrative, and without looking at the value, you can start to recognize where the trade is taking place. Well, if I just pop this into my value narrative box, and then what I'm going to do is I'm going to just take away the screen at this point. Sorry, guys. If I now look at value, sorry guys, I have to highlight those a little bit deeper because you can hardly see them. Now this is just value, guys. It's all it is value, but it's just so you can see what the relationship is. We all know what the value lines are on the euro. We've obviously got all the value lines that we need. We know we've got all the value that we need. But what did I tell you volume is as a relationship to value, guys? What did I tell you volume is as a relationship to value? It's almost an exact negative correlation, isn't it? Now, a lot of people don't get this. A lot of people can't get their heads around the idea. It's at the core. It's when the fog finally lifts. And I'm going to show you a chart where the fog finally lifts. And you finally get it. It doesn't mean you're going to get trades, guys. You're not going to suddenly get trades that are going to be like, yes, that's got to be the buy trade that I'm doing. You still got to work. You still got to put in the effort to get the trade on. But if I said to you that this is alpha, and I just draw you an alpha chart, and this is alpha, and this is alpha, okay? All pretty simple stuff, right? Alpha's going up, alpha's going down, alpha's going up, alpha's going down, blah, blah, blah. So if this is alpha, and I was to draw in volume, assuming that the volume histogram, for example, goes around here, so the time segmented volume goes around here, take out a scrap piece of paper and show me what it would look like. I'm genuinely serious. This is one of the biggest aha moments I see an awful lot of traders get. And it sounds dead easy, and it sounds as if you already know about it, but you've never really thought about it. Draw me what alpha looks like. Draw me what volume looks like in that alpha against a time segmented volume. If you already know the answer and you're not bothering doing the exercise, that's fair enough. But if you already know what the answer is, but you're still not really using it, you're an idiot. You've lost the plot. Because you haven't picked up on anything that I've taught in this classroom ever, if you're not doing this bit of business. And I say, well, my God, that is important. Of course it's bloody important. It's the most important thing I teach. Volume and value. So if I was to say to you, what's your time segmented volume look like? The answer should look like this. Now, if that doesn't give you an aha moment and tell you that everything we teach in this classroom is exactly the gospel truth of the marketplace, nothing will. Because we can verify this. This isn't some rubbishy idea. We can verify exactly whether this is or is not the case. And that makes it really, really, really useful because we can actually establish whether we're telling you the gospel truth. If you have ever had any moment of doubt that what we teach here is the way the market genuinely is, you should obviously already be able to understand this because this is exactly what a commercial trade looks like, really, isn't it? The commercial gets heavy into a position as the price rises, perhaps, or alpha rises, and the price drops or alpha drops, and they get into a heavy short position by accumulating buys. So when I look at value in alpha, volume, sorry, in alpha, this is what it should look like. So let me just verify against the euro on a 5-minute chart whether this is 100% the market truth, what you've never been told before. Let's take a look. You see it? Am I cherry picking these 3 examples where we've got the big volume with the alpha rising, or the big volume with the alpha falling, or the big volume with the alpha rising? Am I cherry picking that phase of the market? Well, let's go backwards and have a look. The volume with the alpha falling, the volume with the alpha rising. There's a big volume there. There's the alpha rising. There's a big volume there. There's the alpha falling. The volume here with the alpha rising. The volume here with the alpha rising. The big volume here with the alpha falling. The big volume here with the alpha rising. The big volume here with the alpha rising. The big volume here with the alpha falling. Seriously. If you haven't kind of got this yet from all of the stuff we teach, I don't know what I'm supposed to show you guys. Do you know what I mean? So when we look at that and we start looking at where my arrows are and we start thinking about what the trades are, we can see the buying opportunities here. We can see the selling opportunities. We can see the selling opportunities. We can see the buying opportunities. That's how easy it should be. Alpha. That's just alpha, yeah? It's alpha on the bunds, the 10 spreads, and the carry the carry trade, obviously, and the carry trade and the pension funds. Carry trade and the pension funds. So this is exactly right. This is 100% exactly what we would expect to see from this process, isn't it? You're seeing the big banks accumulating as alpha builds into a phase. And by studying that building process, you end up with sensational opportunities to trade, guys. It's as simple as that. I can't make it any easier than this. This is easy stuff. That top edge sell in bonds worked out pretty good.